It's time for another super exciting portfolio update. That's it, that's the update. Or it would be if I wasn't still holding about $65,000 in cash. Whenever people hear that, they tend to remind me that investing today is better than investing tomorrow and that the market is designed to go up. Well, that's actually true, but I'm not here to invest in the market. I'm not putting 100 grand into the S&P 500 or the Nasdaq or the Dow. Instead, I'm investing in individual, hyper-volatile growth stocks and cryptocurrencies, the same exact things that I cover on this channel. These things can shoot up or down 10% or more in a single day, and many of them already have. I'm looking at you, Peloton. What's more, many of my favorite companies have had to find clever ways to deal with a global pandemic. Remember that? Oh yeah, and inflation is at the highest it's ever been in my entire life. In this episode, I'm going to show you my updated portfolio and talk about another investing exercise that costs absolutely nothing to do, but that I feel will make us much better investors. Your time is valuable, and we can get right into it. If you're just here to see what's in the portfolio, here it is up front. A lot of things have changed, so let me break it down for you. There are currently 23 stocks and one cryptocurrency in the portfolio, Ethereum. This is probably as spread out as the portfolio is going to get. This is a thematic portfolio, and the themes that I think will provide the most returns over the next decade are fintech, the advanced tech stack, virtual worlds, and a half-baked theme that I'm calling disintermediation. If you've been following the channel for a while, you'll know that these themes actually have a lot of overlap, and ARK Invest covers them all with their research. If instead these themes just sound like a bunch of buzzwords to you, no problem. Let me go through each one real quick. Fintech is financial technology. It's about making it easier to do things like banking, investing, getting a loan, payments processing, and so on. The internet and artificial intelligence are making financial products and services much more streamlined and affordable. That means emerging markets, where a lot of people are still just gaining access to the internet, like Southeast Asia and Latin America, will go through a fintech revolution as more businesses stop needing to rely on their government's broken and fragmented banking systems. So some of my fintech positions are Mercado Libre, ticker symbol MELI, Upstart, UPST, and Stone, ticker symbol STNE. All three of these positions have dropped 10 to 30% in the last month alone, and you can see that I'm in the red on all of them. Stone actually dropped about 30% while I was recording this due to their most recent earnings report, which just came out. 30%, 3-0. I'm going to make a separate episode covering their most recent earnings call because they were actually pretty good, but for now, imagine how salty I would be if I spent all the money I had planned for Stone in one go. The next theme in the portfolio is what I'm calling the advanced tech stack. The tech stack of a business is the collection of software platforms, tools, and technologies that the business runs on. If that makes you think of Amazon Web Services, you're on the right track. In my opinion, a business's tech stack is going to change in three big ways over the next decade. First, all businesses will become more data-driven and more automated. In my portfolio, that's Palantir, ticker symbol PLTR, and UiPath, PATH. Second, in a world full of cyber attacks and data breaches, businesses will invest more and more in cybersecurity. That's Cloudflare, ticker symbol NET, and CrowdStrike, CRWD. Third, as more and more of the business world shifts to online work, online sales, and online networking, I think communication services will keep getting more and more important. That's Twilio, TWLO, and Zoom, ticker symbol ZM. The third theme is the Metaverse. To me, these are the companies focused on digitizing, simulating, and designing things in the physical world or creating new digital worlds altogether. These companies build some combination of viewing devices for augmented and virtual reality, as well as physics engines, graphics cards, and supercomputers. One nice thing about this theme is that it heavily overlaps with all the other themes. Fintech is important to the metaverse for the same reason it's important to the internet. People will transact in virtual worlds like they do in the physical one. And just like any other internet-based service, companies doing business in virtual worlds will want a smart, automated, and secure tech stack. Another thing that's great about this theme is that the leaders of tomorrow's metaverse are already leaders of today's internet. Google, Facebook, NVDA. Unity software is a core piece of software to most of the companies building on it, so it could have gone in the tech stack theme instead. The same can be said of NVIDIA's products and services. The fourth and final theme is all about disintermediation. It's just a loose catch-all theme that's trying to capture the idea of using advanced technology to streamline a legacy professional service down to just the bare essentials. If you find a company that successfully does that, chances are it's a great company. Peloton connects you directly to the trainers, no gym required. Tesla takes car dealers and eventually drivers out of point-to-point transport. Teladoc takes the office out of the doctor visit. The reason C Limited, ticker symbol SE, and Ethereum are my two biggest positions is they fit all of these themes, not just one or two of them. Since they represent 20% of my total investments right now, let me add a little more context to them. This is public.com's page on C Limited. This is always where I start my research now because it usually has a quick tidbit on what's going on. C shares are trading lower after reporting mixed Q3 results. There's a lot of chatter about C Limited after earnings, so there's new information being digested by the market on it right now. C Limited has three main business units: Garena, which focuses on online gaming and publishes some of the most played games in the world; Shopee, which is one of the biggest e-commerce shopping platforms in Southeast Asia and is expanding internationally; and C Money, which is C Limited's digital payments and financial services branch. If each one of these business units were their own stock, all three would be in my portfolio. I'm not joking. Just like Tesla's different business units focused on auto, energy, robotics, and AI training. And just like Tesla, the fact that they're all one company and get to crosstalk and leverage each other's assets is what makes this company even more special. Sure enough, these headlines give me a sense that there's something I need to look up and try to understand about C Limited right now, and these articles are probably a great place to start. So, that's what I'm going to do right after I finish crying. I mean recording the rest of this episode. The way they organize and present stock data is a big reason that I'm a fan of public.com and asked them to be a sponsor for the channel. Whether you're looking for a new home for your own portfolio or you just want to invest in the channel that invests in you, you can go to public.com/ticker symbol U and you'll receive a free slice of stock worth up to $70 when you fund your account. I'll leave a link to that exclusive offer for you in the description below. My other top position is Ethereum. Based on my limited understanding, Ethereum is the C Limited of cryptocurrencies. Some of the biggest blockchain-based games like Axie Infinity and Alien Worlds and even CryptoKitties are on the Ethereum network. Don't judge me. Marketplaces for NFTs and digital collectibles run on Ethereum. For example, Vivi is an app-based marketplace for premium licensed digital collectibles. With Vivi, people can obtain digital collectibles of different rarities and showcase them in virtual showrooms, as well as buy, sell, and trade them with other users. Vivi has licensing deals with Disney, DC Comics, and others, so their collectibles include everything from Marvel and Star Wars to Batman and Superman to Star Trek and a lot more. That's real commerce happening on the blockchain. And of course, Ethereum on its own fulfills the role of being fintech, but in a different and much larger way than C Money. So in my opinion, Ethereum and C Limited embody my vision of the future into completely different, unrelated asset classes, stocks and cryptocurrencies, so I'm happy holding both of them right at the top of my portfolio. Comment below or tweet me at ticker symbol U with your thoughts on my portfolio as it is right now, remembering that the goal is to compete with ARKK. ARK Invest's Thematic innovation fund that's actively managed by Cathie Wood. What do you think about the themes in this portfolio and the weightings of the stocks? Am I spread out too thin? Given how volatile the market is, am I holding too much cash? Seriously, I'm excited to hear your thoughts. Okay, if you don't like one or more of my stocks or themes or ideas about the future, just don't invest in it. If this whole metaverse thing isn't an idea that excites you, don't worry about it. You should be thinking of the entire stock market as a buffet. And actually, all of YouTube for that matter. It's okay to buy some stocks that your favorite investors talk about, but not others. It's okay to buy a stock, learn something new about it, and then sell it if that new information really changed your mind. It's okay to be wrong. We YouTubers don't really say that enough. It's not okay to stay wrong. And that's what's going on with the bottom positions in my portfolio, mainly Peloton and Snapchat. I haven't sold a single share of these stocks, but I haven't bought the dip on them because I'm really thinking about their valuations versus the rest of these companies on my list. In my previous portfolio episode, I gave you and myself an exercise. Our job was to take our favorite 30 or so stocks and rank them. The top half of our list forms the core of our portfolio, and the bottom half should be our watch list. If a stock gets added to your watch list, One has to be taken off because we're not able to keep track of hundreds and hundreds of stocks. A stock has to make it to the top of our watch list before it can be placed in the bottom of our portfolio. That's how the watch list protects our portfolio from making emotional investment decisions. If you want to learn more about that exercise and try it for yourself, check out my previous portfolio episode. I'll leave a link to that in the top right-hand corner of your screen right now, and in the description below as well. Here's the issue. If you already hold a bunch of stocks and you did this exercise, you probably ran into an interesting problem. Your new ordered list and your existing portfolio don't match up. That means you're probably wishing you held more of your top stocks and that you're holding some stocks that you're no longer very confident in. I totally get it. The first thing you need to do is not beat yourself up because these are living, breathing, evolving companies that are changing all the time. It would actually be a lot weirder if your list and your portfolio always matched exactly as new information kept coming out and all the stock prices kept moving. We YouTubers don't really say that enough either. That said, here's the next exercise. All we're going to do is start at the top of our ranked list and ask ourselves this question. Based on everything I know about this stock, do I want to be holding more of it, the same amount, or less of it today? Don't go and do anything crazy, just answer that question honestly for each stock on your list. If you're not sure, that means you should go and read the latest earnings report and a few articles on the stock, or go find a few good YouTube videos on it, or however you choose to do your own research. If you wish you were holding more of every single stock, you probably need to raise your standards. This isn't Tinder, you don't need to swipe right on everything you see. What you'll probably find is that there's a stock somewhere in the middle of your list that's pretty close to spot on. You like the stock, you're glad you hold the shares you have, and you don't necessarily want to buy more even at these prices, but you would if it dipped pretty hard. Hopefully, most of the stocks above that one are stocks that you wish you were holding more of, and most of the stocks below it are the ones that you would cut before you cut that one. If that's not true, ask yourself again if your list is really in the right order. If you have several stocks you're happy with like that, find the bottom one on the list by weight. This stock is the new bottom of your portfolio. You're done swiping right on stocks that you have less conviction in than that one until something fundamentally changes. For me, that stock is Facebook, ticker symbol FB, which is changing its ticker symbol to MVRS in December. Look at my stocks underneath Facebook. NVDA, AMD, Tesla. These are some of the best companies in the world. They also got 40% more expensive in the last 4 weeks or so. I want to be holding a lot more of them, but not at these prices. So they're staying below Facebook until either their prices come down or until they grow into their valuations a little more. That doesn't mean I'm selling them. I'm just letting them be because I don't think these companies are worth 40% more than they were a month ago. The rest of the stocks on my list below Facebook, Signify Health, Pinterest, Snapchat, and Peloton, are also good companies. They're just companies I'm not worrying too much about right now because look at the very top of my portfolio. Almost all of my highest conviction stocks are on sale. So if the order of my list is right, where should I be putting my next dollar? For you, the place to start is with the highest conviction company on your list that's dipped the hardest. For me, it's definitely one of these top 7 companies. So in just 2 straightforward, zero-cost exercises, we've narrowed our investing universe to 30 stocks and then ordered them in a way that quickly lets us spot opportunities and prioritize our research and investments. We didn't dump all of our money into the market at once, and by being patient, we avoided a massive sea of red among some of the most volatile stocks on the market. Getting organized doesn't cost us anything. Staying up to date on our highest conviction positions doesn't cost us anything. But I can't help but wonder how much it gains us in the long run. This is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.